Hey, it's Tyrone Jackson, the Wealthy Investor, coming at you with another hot video. I wanted to talk about some trends in the marketplace today that I think are going on that no one seems to really be talking about. These are long-term investment trends, long-term investment stocks. I am going to reference some of the things that we discuss on a regular basis in the Wealthy Investor program. If you haven't already done it, you probably want to grab my CD series, which of course is the Wealthy Investor's Guide to Stock Market Success, so that you can learn a little bit more about the approach to the stock market that we deal with in the Wealthy Investor Program. It's really simple, it's really easy, and our primary strategy is something referred to as covered call writing, although today I am going to talk a little bit more about the power of being an investor. And you know I'm a huge fan of actually taking our covered call profits, right, our covered call profits, and investing them for the long term. So the first stock that I want to get into here is something that you heard of called Facebook. Now, what's so amazing about Facebook is here's the company's performance. You see that the stock actually dipped down here a little bit after its initial public offering and then floundered. And all of a sudden it goes from 30 to where it is now in a very short period of time up to 61.85. I'm doing this when the market is live, so the stock price is actually changing. But that is a 100% increase. Now, why are these shares actually exploding from 30 to 60? The answer is really simple. The monetization of mobile. Now, you know I tend to teach everything from the Sesame Street version, so I don't like to use a lot of complex language and Wall Street jargon in the beginning, because if you're new to investing, it all just seems so complicated. But essentially, Facebook has 1.2 billion users, and they're the first social media site to really get people to start buying things over the phone, right? Now, here's what makes this so powerful. And you have to, part of investing is that you look towards the future, not where you are now. The tech gods really want us to stop purchasing things online, but be able to have a phone, see a shirt, a hat, a electronic device, and purchase it. Facebook is really doing a great job at doing that. Now, why is this so powerful, this habit of purchasing things over the phone? Because I want you to think about a teenager that you know that's like 13, 14, 15, 16, 17. See, they don't have a phone and a credit card yet, but in about 5 to 10 years, they will. They will only know a world where you see something on your phone and then you click and you buy it. They won't know a world without voicemail. They won't know a world without wireless internet connection. You mean there was a time, Daddy, when we had to connect to the internet via wire? Yes, that's all gone. You mean there was a time when people just didn't see things on their phone and buy them? Right? So our world is changing really quickly. For them, that is their new reality. So Facebook, the shares right now are more of an investment. Again, I teach this in the Wealthy Investor program. I don't think you take a large position here. Can you buy 10 shares for $610 and just see how they perform? And you know, one of the tenets that I always espouse is you buy more shares when the stock rises. It tells you when to buy, and we have various buy signals that we follow, et cetera, et cetera. But the real winner in the mobile monetization game, which no one is talking about but me, is not really Facebook. Although the stock may rise, it is what? The people who process the credit cards. Take a look with me at American Express. Now, American Express tailors its card services towards upper middle class and business owners, right? People who can prefer to have charge cards and a suite of business services. But look at the stock's performance since 1975. It has been what we call a steady eddy, what we call in the Wealthy Investor Program, a great date for a very, very long time. These black dots up here represent stock splits. Most of them are 2-for-1 stock splits, although if you look back in the history here in Yahoo Finance, you'll see that there was one 3-for-1, but they traditionally split the stock 2-for-1, which means if you held on all this time on a split adjusted basis before it was even $10, look at where you are today. Okay, you were rich, basically, almost no matter what. As long as you bought 100 shares, you did very well. But it made you pull back here, which was another buying opportunity. And look, this is called retracement, and we just ripped. American Express will be at the forefront of this what? revolution of buying online in the monetization of mobile. The next stock I want you to look at, because if you're not using your American Express card, maybe you're using PayPal, owned by who? eBay. This is a 5-year chart of eBay. If you had bought your shares down here at $20, this is less than 5 years ago. Pay attention if you don't have a lot of money, because a $2,000 investment at 20 bucks, right, is now worth $5,200. If you went in and bought 1,000 shares at $20, they are now worth $52,000, because eBay doesn't get most of its revenue from auction sites anymore. It's from PayPal. Every time you use PayPal, they take a fee, right? But if you didn't want to use American Express to pay for something online, and you didn't want to use PayPal, perhaps you would use Visa, another publicly traded company. You know how I feel about buying stocks in stories that you understand. This is the 5-year chart of Visa. And if we had bought in even around $80 a share, right, which is where I started, with 100 shares, if you had just bought 100 shares, that'd be $8,000. Look at what it's worth today, over $20,000. An $80,000 investment is worth over $200,000. I'm multiplying the shares by the stock price. Visa is still young, and all this top line revenue is going to grow as people use their Visa cards over monetization of mobile and over their phones. Now, if Facebook is the leader in monetization, you don't want to use your American Express card. You don't want to use PayPal, which is owned by eBay. You don't want to use Visa. Perhaps you'd like to use your MasterCard. Do you see where we're going right now? All right, look at this picture here. I get so excited just talking about this. If we had picked our shares up at MasterCard on a dip at $2,000 worth, 100 shares, it'd be worth $7,500 today, which has got to mean a $20,000 investment is worth what? $75,000. And for the big players, a $200,000 investment in MasterCard is now worth over $750,000. Why? Because of the monetization of mobile. You see, being able to spot a trend in the stock market, you wouldn't want to, if you understood how the game is played in the stock market, you would never, ever, ever, ever want to have your money in a mutual fund when you can pick individual stocks on your own. Well, what does that mean? Facebook, monetization of mobile. People are using their what? Credit cards to buy things. Their American Express. They're using PayPal, owned by eBay. They're using their Visa card. Getting this financial education, very, very good to be able to spot this trend. Cashing in on it by owning shares of MasterCard, priceless. You didn't see that one coming. All right, having a little fun there with their old ad campaign. Being able to understand these trends and learning how to handle your own money is key. You don't even have to start with hundreds of thousands of dollars. Remember, I just did these increments in 10 shares, right? What if you had purchased 100 shares at 20 bucks? Where do you get the money from? You liquidate some mutual funds. You start to manage some of your own money. You use your income tax refund. This is how people get started wealth building. This is really exciting stuff. Now, this is really interesting because we're in 2014 and it's going to be really interesting to see how these stocks perform just in the next 36 months. This is a 5-year chart. Where's this stock going to be as people start buying more things using their MasterCard over the mobile phone? And let me just also say this. You know that both Visa and MasterCard are not credit card companies. They're brands, and they license their names to banks. But they get 2 cents for every transaction worldwide on your Visa card and on their MasterCard as part of their royalty agreement. All right, so we've learned a lot here today. Let's keep an eye on these trends. Again, if you haven't purchased the Wealthy Investor's Guide to Stock Market Success, my audio CDs and manual that explains all of this to you, you should probably grab it sooner rather than later. Really don't wait, because it's really one of the best things that I've seen on the market. Of course, I've created it. It's one of the best things that I've seen on the market that really, in simple terms, explains stock market trading and investing to you. And let me just end with one other thing. If we can buy shares in AXP, eBay, Visa, and MasterCard, then that means we can certainly cover call right on them and get monthly residual income. You just have to decide whether you want to trade the stock or invest it. And we know that we can do both. We can trade it, hold on for the long term, have the best of everything. As I always say in the Wealthy Investor Program, your wealth is in your thinking. All you need now is a financial education to help you capitalize on everything that we've talked about today. This is Tyrone Jackson, the Wealthy Investor, saying thank you for listening. Remember, an open mind, be open to wealth and great opportunities, because that's how your life will change.